During Wednesday's Asian trading session, spot gold extended its gains from the previous day, continuing its upward momentum, bolstered by the dovish signals from the Federal Reserve's interest rate meeting. Gold once again hit a historic high, smoothly breaking through the $5.200 mark and further extending its bullish trend. The fresh high in Asian trading was primarily driven by the dovish stance from the Federal Reserve's meetings, which further reinforced market expectations for interest rate cuts. The Fed began its two-day policy meeting yesterday, January 27th, with a critical post-meeting press conference scheduled for today. While the market widely anticipates no change in interest rates this time, Federal Reserve Chair Powell's earlier optimistic remarks on inflation and hints that this year's pace of rate cuts may align with markets expectations have alleviated concerns about a hawkish policy shift. Coupled with easing worries over the Fed's independence, the U.S. dollar index continued its decline, creating room for gold prices to rise. The persistent weakness of the U.S. dollar index has been a significant driver of gold's gains, influenced by the Fed's dovish outlook. The dollar index continued to trend lower during Asian trading, further reducing the cost of purchasing gold for holders of non-U.S. currencies and stimulating global investor demand for gold. Market expectations for a Fed rate cut in March remained above 55%, while expectations for 225-point rate cuts in the second half of the year had solidified. The low interest rate environment continues to reduce the opportunity cost of holding gold, a non-yielding asset, providing solid support for its long-term strength. Ongoing geopolitical risks have further amplified gold's safe haven appeal, resonating with monetary policy expectations. The escalation of U.S.-South Korea trade tensions remains unchanged, with former President Trump's threat to impose a 25% tariff on South Korean goods still impacting market sentiment. Unresolved issues such as the Greenland sovereignty dispute and tensions in the Middle East continue to keep global geopolitical uncertainty elevated, driving funds into gold as a safe haven and serving as a key catalyst for gold's breakthrough of critical resistance levels. From a technical perspective, after breaking through $5,200, spot gold's bullish momentum remains strong, with further upside potential now open. The next target to watch is $5,280. The daily chart shows gold trading above the 5, 10, and 20-day moving averages in a steep bullish alignment, with the price pulling away from the moving averages, reflecting short-term accelerated upward momentum. The MACD indicator's red bars continue to expand, with no signs of contraction in the momentum bars, indicating that the bullish trend remains intact. The RSI indicator has risen to around 78, entering overbought territory, while it continues to move in tandem with the price without showing signs of divergence, suggesting that bullish momentum remains strong. The accumulation of overbought signals is gradually increasing short-term correction pressure. Short-term support levels to watch are the $5,200 psychological mark and $5,180, with strong support at $5,150. If gold holds above $5,200 during a pullback, the bullish structure is likely to persist. However, a break below $5,150 could trigger further declines towards the $5,100, $5,120 range. Institutions remain optimistic about gold's outlook, with Deutsche Bank and Societe Generale both forecasting gold prices to reach $6.00 by the end of the year, further reinforcing the market's bullish sentiment. All content is for reference only and does not constitute investment advice. Any trading based on this information is at your own risk. Please subscribe, like, and share. Thank you for watching.